Now, well, we have been discussing about interoperability, EVMs, and now where do we use this, right? So I would like to invite here some people to talk about DeFi, but not only DeFi. What is hello? What is hybrid finance? What is going on in the market between the two universes? So I would like to invite here Sophia from Fireblocks. Hi, Sophie. I would like to invite Marwan from BNB, Build and Build, and Cristopher from dYdX as well. Cool. Sophie, let me bring up the questions here. I'll be mediating this one. Is it working? No, not up.
Hello? You don't have a chair.
Sorry?
A chair. Don't you want a chair?
Oh, yeah, I need a chair. I'm just going to get one.
Hello.
Can you help me with a chair? Maybe I'll just get this one here.
There we go.
There we go. All sorted. Well, first of all, thank you all for being here, for accepting the invitation to discuss this. For me, it's a very interesting topic because it's just what we were talking at the opening in regards to, at the end of the day, how does these transactions will happen? What will be the main systems? Will we have a DeFi system that is completely disconnected from TradFi? Or are we having some kind of bridge, a custodian in the middle, or some sort of that? So we invited these participants because they are in both worlds. So I would like to ask you guys to introduce yourselves, what you're doing, and then we get into this interesting topic of where we're heading in terms of DeFi and trading and moving money around.
Sure, you can start.
Hey everyone, I'm Marwan. It's amazing to be here, so thank you for organizing to the team. So I lead our DeFi team at BNB Chain, which is one of the largest layer 1 chains in the market by TVL and number of active users, and also lead our European efforts as well.
Hi everyone, thank you so much for being here. It's a pleasure as well. Always nice to come to Rio. And so my name is Sofia Duesberg. I work at Fireblocks in our Latin America team. And Fireblocks, for the ones who don't know, we're infrastructure and custody provider for companies that are building on digital assets. So very diverse set of clients from banks, exchanges, custodians, and even companies that are doing things with real world assets, tokenization. So a very robust platform to expand the ecosystem.
Okay, hello everybody. My name is Cristopher. I'm currently working for dYdX Foundation, which is a foundation that supports the dYdX protocol. Our mission there is support the governance in the protocol and also try to support and promote the protocol, specifically in Latin America. And thanks for having me and excited for this conversation.
Nice, pretty cool. Thank you all for the introduction. I think the first thing I would like to discuss is where do we come from and where are we heading? What I mean by that is, well, back in the day we had like simplistic models for LPs, we still have the automated market making, we have the protocols being built in DeFi. Some of these protocols will be sort of commoditized when we think about lending protocols, trading, and stuff like that. And then, on the other hand, we have always been, let's say, against the traditional system, and now we are moving towards that. So my question is, it's not that where did it go wrong, but where did it change? Because back in the day, we were like completely against the traditional finance markets and getting into crypto. Now we are very excited with ETFs and all of that. So I'd like to take your inputs from your first experience with DeFi, and then where you guys are seeing we heading to.
I can start on this topic and this question. I think everything started after the crypto sentiment around the world started after 2008 subprime crisis. If you see the very first block, you have the newspaper headline talking about that governments will rescue banks, traditional banks, and that kind of, I wouldn't say hate, but that kind of rejection of TradFi started there. And this kind of things, this kind of new technologies takes time. And we are kind of starting to get more mature, but still very early. We're still very early in this kind of market. But I think it started there. And after Cambridge Analytica scandal with Facebook kind of impacted a lot too. So there's some, events that, produce it the moment we have right now. So yeah, that would be my take on that.
So I think I'll even go a step back. So my background, I come from traditional finance. I used to work at Goldman Sachs for 6 years. So when I first read about DeFi, for me it was really like a shock of amazingness, right? Like especially when you work inside a bank and you see, the inefficiencies, the costs, and times that sometimes a client would send a wire and could take many days and very costly and with no visibility, right? So when you first think about DeFi, it's really like amazing, right? You're solving so many issues, taking out intermediaries that perhaps shouldn't be there. But then when you start actually getting to it and creating things, you realize that, okay, but in order to scale to the masses, to our grandmothers, right, like start to use it, you need to make it secure, you need to make it efficient, you need to make it interoperable. So I think, to answer your question, we're getting to that point right now where you're seeing a little bit the bridge of both of these worlds, right? And specifically at Fireblocks, our mission is to bring security at the same time as efficiency, right? So then the result will be scalability and mass use of these amazing new products. So we really believe that, we still believe in a world where if there's an inefficient intermediary, it should be taken away, but with a secure, alternative where anyone that will use it, they will not need to think about the blockchain or whatnot, but they will be able to use it in a safe way and in a smart way.
So I think I'm going to add to some of the points I already agree with fully. So I think the first point is like, where did this technology stack come from? I think that the big pain point, and I'm sure you're all very familiar with it, but the financial infrastructure that most people have access to today has notoriously been associated with the disenfranchisement of many customers, many users, many communities that haven't had equitable access or equitable financial inclusion, or at least haven't reaped the rewards and haven't had control, of course, or custody of their funds, right? So I think that was the genesis, kind of as an antithesis to the '08 crisis. And then we had the second wave, I think, which is something that we maybe overlook to some degree, that has dominated the 2010s, which was an era of cheap money, right? People were looking for the best yield, and as Chris Dixon, mentions, right, crypto is a great computer, but it's also, whether we like it or not, a big casino, some parts of it. And that was huge for adoption, right? For people chasing yields, people chasing financial reward that wasn't readily and easily available by traditional financial structure. But now, where are we now? 2024, maybe it looks a little bit different to what we were expecting in '08, and as you mentioned. So one, the irony is that we're moving a little bit more closer towards traditional finance. And I think the big reason for that, and I spent a lot of time meeting with DeFi protocols, founders, investors, is that we're building a trustless economy. And the paradox of a trustless economy is that you need trusted brands, you need trusted protocols. As you mentioned, you need your family to be able to use it, you need the everyday user to be able to enjoy it, right? And so I think that, for me, that's where we're heading, right? Like we have this trustless infrastructure that people can enjoy the freedom of money, but it has to be simple, reliable, and safe for people to actually trust it and put there, to use it as their everyday financial gateway.
Yeah, I'm really glad on your questions because you all came to a point that is, at the end of the day, most people don't understand how banking works. They're not interested in knowing that. So it all comes back to the UX and trust, right? Because people don't have this time or, I don't know, the curiosity maybe to go on and download a wallet, save their mnemonic words and so on. So, well, since we are now moving towards this more traditional finance, how do you define Web 2.5? Well, there are many people, there are many ways, but how do you see it? And what I want to discuss here more specifically, or talk about, is hybrid finance, right? This is not only because I know what Fireblocks is doing, but also I believe it's a good solution for some of these current exchanges. I don't know if many people know here, but I use it to be at FTX, so I know how traumatic it is to be inside somewhere where people have your money in and you don't know what they're doing with it. So this hybridization and use of the technology in itself to make better processes, make better products, give more access, as you said, I think it all boils down to that, to the use of the technology. But how do you see this transition, the Web 2.5? How would you define this?
Okay. I think in the short term, there's space for everybody. There's space for Web3 projects. There's space for Web 2.5 projects, and maybe in the short, midterm. But I believe that in the future, I'm pretty much aligned with former CEO, Antonio Juliano, that he says that in the future, people will be more prone to use 100% decentralized solutions. But I definitely believe that in the short term, midterm, we will have tons of projects that serve our needs well. But I think in the long-term vision, pretty much like Antonio says, we all gonna reach the common understanding that we need 100% security, safety. So yeah.
Thanks. Yeah, so I think when we think about Web 2.5 or, as you said, hybrid finance, right? So you're kind of combining these both worlds. On one hand, decentralization. On the other hand, security, mass use. So how do you make these two effective, right? In a way that you still have the ethos of crypto and everything that it started, this whole revolution, but at the same time where we can see our grandma and really mass use using it without thinking about it. So at Fireblocks specifically, you mentioned, this is our goal there, right? So for example, on the decentralization and the ethos, Fireblocks, for maybe some people don't know, but we're actually not custodians, right? We're 100% tech provider that provide a type of custody that it's called auto custody or direct custody in the perspective of our clients, which means that, at Fireblocks, we're not in the money flow. If tomorrow something happens, every client can move their funds to another wallet at any moment, right? So again, keeping on this side of the world, the decentralization, you own your keys, you own your assets. And then on the other hand, okay, but how do we make things from the financial world, traditional financial world, like transfers, in a way that you're keeping this side, right? So we've developed many products to deliver it, this combination of hybrid finance. One example is, it's called off-exchange, right? So the ability for clients to trade on exchanges without having to actually send the assets to the exchange. Because at the end of the day, when you send the assets to the exchange, you are, kind of believing that these assets will be safe, which hopefully, they are. But as we saw with FTX, it could be that they aren't. So with this new product, because you have your own custody, right, with the Fireblocks set of multi-party computation, which is the key security, but at the same time, you're able to trade and do your operations in an effective manner in an exchange, but without having to actually send the assets there. And then some other products that we have, such as atomic swap, smart transfers, and so on, again, to kind of bring this, traditional world of finance, of things that we need to get it done in the crypto world, but still keeping this ethos of decentralization. So that's kind of how I define this hybrid finance, and we hope to get more and more products in this line to really be able to bring the mass.
Being fed, I always feel like the good points have already been mentioned, but I'll ask a question to the audience, right? Because we're talking about hybrid finance and what does that middle ground look like? So how much in assets are in US bank accounts today, right? If anyone takes a wild guess, it's 2 trillion. How much of that is actually insured, readily available in cash under the US federal government? It's only 40 billion. So 40 billion is the insurance coffer of the US government to protect $2 trillion in assets. Exactly, more or less, right? So, of course, worst case happens, the US government will do probably what it does best, is my own point of view. They'll just print the money. But, not good for token value, right? So then we go, well, maybe that's like the full centralization model. What's the full decentralization model? I won't speak to that. But on the question of hybrid finance, I agree with everything that's been mentioned. Maybe more from where we sit as a blockchain that was incepted by a very large exchange. For us, hybrid finance means, how do we give access in a safe, quality, trusted environment to users who are, I would say, kind of the crypto curious, right? And we know this model is working. BNB started it off in 2020, and it's the new playbook now. There's Base, there are other exchanges, OKX. They're all following this playbook because we're seeing that people still want that UX, they want that product, they want that brand, they want something easy to use that their friend referred to them maybe over dinner. But they also want some of those benefits of that control and finding that middle ground. And for me, it's a product, right? It's like these new decentralized wallets that you get through today, OKX or Binance or Coinbase, but maybe one day it will be through a regular like new bank or a regular retail bank. I think that's what hybrid finance to me in phase 1 this year and the years to come looks like and beyond.
Nice. Well, this is, again, something that fascinates me because at the end of the day, we are rebuilding what we know as the financial system, right? So I want to get into we were just talking about it, but it's such an important point right now that is interoperability, right? So in Brazil, we are going through the DRAX, we are going through the whole tokenization of the economy. And for those who don't know yet, this DRAX is a liquidity layer set by the central bank, where all transactions between the central bank and commercial banks and other financial institutions are settled on the blockchain, right? So the central bank has designed it so that the other layers of such tokenized economy should be built by the private sector, right? This is other 4 layers on interoperability, protocol and assets, business services, and so on. So we have right now in Brazil a moment where many players are working with many blockchains. So looking into Web 2.5 and going into TradFi, what are the learnings we can get from DeFi and interoperability to bring in to this? And I would like to take this on each one's perspective. Marwan as a blockchain, a fully decentralized service, how do you guys see the bridging, especially exchanges having always been the bridge for choice. Like everyone that was back in 2015, 16, until 2021 maybe, you had to go to an exchange to go to another chain. So that's how you would bridge. Sophia, from the perspective of a service provider as well, it would be great to see what we can learn from that. And from you guys, well, you have been on L2s, you then decided to have your own app chain. How do you guys see liquidity? How does that connect to others? Because liquidity is pretty much fragmented in crypto overall. So what are the learnings we can take from that and bring to this tokenized economy, to DRAX and so on?
Sure, I can start. Great. So, yeah, I mean, so a bit tying together, right? When we think about where we're going, interoperability, if I can say that. So it's so hard.
For me too.
Are you in crypto?
I think for all of us.
Sorry?
It's all of us.
Yeah, okay, great. No judgment. But yeah, so interoperability, it's really a necessity, right? For us to create this world where we hope to see everybody's using it. And so at Fireblocks, given we're tech provider, we actually have different ways that we try to improve this, right? And so when we think about blockchains, we really, are constantly adding new blockchains. And the way that we connect them, we have integration with Wallet Connect, where our clients can use dApps that then can, connect different chains to bridges and so on. So that's kind of like one example of how we make that happen. Also in terms of, kind of connecting different counterparties, right? So actually Fireblocks, again, we're born by a custody, providing custody, but actually a lot of clients, they say they stay because of the Fireblocks network, right? So what is a Fireblocks network? It's basically where all clients can connect in a very seamless and secure way through these rails, where then you're able to do your operations with your counterparties in a very seamless way without having to copy address and so on. So really, again, make it more fluid, everything, right? So I think these will be like the main things. But again, really trying to bring, the whole point here is bringing security in the interoperable results that we're trying to create here.
I'll just quickly chime in. In terms of the interoperability question, I don't have much visibility on how to interact as much with the CeFi world, because a lot of them thinking about it is really chain to chain. I think we're still figuring out the learnings in real time. The reality is, like, this year has been dominated by the explosion of layer 2 chains, and we're going to see more and more. Most protocols want to capture value in that way, and you have your own chain as well. Like, this is the new kind of modus operandi for building your moat. And the reality is, as you said, liquidity is being fragmented, the users are fragmented, and it actually creates quite a suboptimal experience for everyone. So I think we're still figuring out how do we build that seamless, like, fluid experience, so that, to be honest, at the end of the day, you don't even see the chain. And I think we've been talking about that for years, that one day we'll be using these services, enjoying the benefits, and for most people, not having to worry about the underlying infrastructure or the underlying chain. So I think that's the direction we're heading in. But in terms of building that interoperability, it's a challenge. My own very personal prediction, I think liquidity will be consolidated on a few chains. There will be liquidity hubs, and the ones that win that race first will dominate. And the others will have to build their own niches to have that use case, those users, and kind of be here for the long term.
Well, my take on that is interoperability. I think the whole essence of that is the idea of trying to escape from some particular chain or institution using synthetics, and the idea of one blockchain that's completely different from A blockchain to B blockchain. I think that helps in order to make the market grow. I don't see this idea of interoperability working in large scale in some points, but on the other hand, I see that can pretty much work, because we cannot kind of forget what happened in 2008 in the subprime crisis, was tons of synthetics that was traded by another synthetics, and somehow kind of generate a domino effect and kind of crush everybody. dYdX have some initiatives with IBC. That's the idea of communicate from one blockchain to another. Ethereum, I know there's some initiatives like Picasso and Polymer, this idea of, projects inside the Ethereum communicating with blockchain and projects inside Cosmos, which is great. But I'm kind of really trying to figure it out at the moment. Can't work in a large scale. So yeah, definitely that would be my point on that.
Yeah, I guess we're gonna have a few challenges on that to come up.
Still cooking it up, basically. The solution.
Yeah, exactly. And we see a lot of, again, people are just discussing this, and you can see a lot of solutions coming out. Bridges, like full-blown centralized bridges, and like all the types. So I would like to take these last 5 minutes, and we talked about where it came from, where are we going, where are we at, sorry. And now I'd like to take your take on where we're heading to. Like, is full decentralization possible? Is it, like, will we have, like, a good majority of adoption in regards to full decentralization, or will we need these intermediaries or other stuff that helps the UX? Like, can we, what are your take on this? Like, I'd like to take your vision on all.
Yeah, I believe full decentralization is possible and dYdX doing it right now with V4 and Cosmos. So I think will be the future because third-party bad actors will come after you. We're seeing with another decentralized players as well. So if you're not prepared, they will come for you. And not just institutional, public, and private bad actors. Can be a hacker, can be anyone. So you need to be prepared for this kind of scenario. So definitely, as I said in the beginning, there's space for everybody in this industry. But in the long term, everybody collectively will understand that we need to be 100% secure. No more kind of loose hypothesis. We need to make sure that our funds are safe and code is law and not third party saying that you're secure. So even I definitely believe that there's a very nice private institutions like say, hey, we are working fine. We are serious institutions. But for example, one of the main reasons that dYdX left L2, the StarkNet initiative for zero-knowledge rollup, is that even StarkNet, trying to work as an independent L2 provider, they have a central sequencer. I think that's the term, central sequencer. So that's kind of make the L2 and a jail party. So, but if you ask StarkNet, say, hey man, we are trying to do our best to provide a serious, very nice L2. So we definitely will reach this common understanding in the long term that we need code saying the things we definitely have to do, not just third party. But in the short term, in the midterm, I think there's space for everybody, definitely.
Yeah, just one quick point there. At the end of the day, like Marwan said in the beginning, financial services are this way to find out the best uses and how to find these solutions. So I agree with you, but I do see a lot of challenges on this way to get into a full decentralization.
Yeah, I agree. And I mean, my personal...
And just quick point, it's not that I don't want to. I would love not to have anyone overseeing what we do, but sometimes it's hard to.
Yeah, and especially when, again, we're here, right, this small community that we've been exposed to crypto blockchain for a while or whatnot. But this is like still a very, very minority, right? I don't know about you guys, but whenever I go out with friends, family. There's still so much, lack
Nerdy
of
stuff.
knowledge.
Nerdy stuff.
Exactly. Nerdy and scary, and they don't understand. Even subjudgment, but less now. Now you're starting to see some friends asking how they can invest. So, but you still have so much, a big ocean for us to swim in. And specifically, when I think of the mass use, I really see it difficult, full decentralization, right? And we've seen it, like when you ask someone to download the MetaMask or any type of these wallets where you have to memorize, and just like these are barriers to entry. And so if we really want that kind of like future that everybody's using it seamlessly, and I really see it more as this kind of hybrid world. But again, continue keeping the ethos and taking out things that are unnecessary and intermediaries that are unnecessary, because that's for sure, it's something like, why do you need to pay high fees for a cross-border transfer? I don't think it's really a necessity, right? Like those are just, monopolies of institutions that have been doing this for a long time, excuse me. And so when you make those kind of use cases more efficient and take those players out, but at the same time, make it secure, and that's when you're really gonna see the mass usage. So answering to your question, Antonio, I really see it more in a decentralized together with like efficient ways and kind of like this hybrid world at the end.
Echoing, not possible in the immediate future. I think there are a lot of challenges to that, but I am hopeful that decentralized finance will play a much greater role, right? There is that opportunity for greater freedom and greater prosperity, and people see that. And I think, my own very personal view, I think there is no shortage of political instability in the world that will act as an exogenous push for people to adopt. I mean, for example, even Jamie Dimon last week, he openly acknowledged that the real estate debt crisis in the US could very easily lead to the meltdown of a few banks. And the Federal Reserve already said this. And if you're one of those banking customers, you may want to make that migration. And politically, we have seen how US financial infrastructure can be weaponized in different parts of the world. And I suspect that there will be maybe entities around the world that will try to adopt some of that decentralized financial infrastructure. So I think it will be a very long-term journey, but I agree. I think it'll be a hybrid for a while. But I think that hybrid will be our best bet onboarding the next million or billion users.
Nice. I agree with you all. I think one of the most important messages here is what Sophia just said, that we don't forget the ethos, that we keep people self-sovereign and free to be able to transact. Do you guys have questions? We have a quick Q&A here.
Don't be shy. Fire around questions. You're burning to ask.
One in the back.
Hi, good morning. You talk about code is law and self-custody. That's something that really take care here in Web3 world. And how do you see the trade-off between self-custody and Web 2.5?
I think because I mentioned code is law, I will go first. I think we have all kinds of clients. I completely agree with Sophia and Marwan. For some people don't care about what happened behind the curtains, don't care about all this nerdy stuff that we are presenting here. And some people just want to push a button and see the magic happens. So in the short term, mid-term, I think all kinds of people will be satisfied by this kind of solutions. But in the long run, in a long-term vision, I think I just mentioned two main events that happened with 2008 subprime crisis and Cambridge Analytica, but I think this kind of events will happen more and more often. So we'll collectively reach that understanding that we cannot deal with with this kind of decisions and let third-party people define what we're going to do with our funds. So I think in the short term, repeating again, in midterm, I think there is space for everybody, every single kind of project. But in the long term, I think we're going to get this realization all together.
Bom dia, boa tarde, guys.
Boa tarde.
My question is actually on the adoption side. So how are you guys tackling on each of your different solutions, right? Or tech stacks? How are you guys tackling the desirability of how users or onboarding users might interact with the system? Because the moment you don't actually get what it is you want out of the system you're interacting with, you're just not going to use the tool. Whether that be the greatest blockchain in the world, the thing that's going to bring me the most impact. If I don't know, if I can't figure out how to use it and I'm not consistently getting what I want out of it, I'm just not going to use it.
Yeah, I can start. Yeah, so I think that goes together a little bit with like these barriers of entry, right? And so one thing that even Antonio mentioned, it's like UX, right? So at the end of the day, you can have the, as you said, the best blockchain, the best DeFi protocol out there. But if the user tries to go and use it and they can't, that really creates this barrier of entry, right? So specifically at Fireblocks, we try to also create a lot of ways that our clients can leverage to make this barrier of entry as low as possible and hopefully remove it. And so, for example, with like an easy sign up, right? So rather than going to an app that you're going to interact with a DeFi protocol and having to add the wallet, we created what we call non-custodial wallets. So basically, the user of our client, the companies that leverage Fireblocks, they can go put their email, and automatically through APIs, you'll create the wallet in the back end that they're gonna, have their assets in a safe way, but they just only use to add their email, right? So I think for me, like the US is a big part of it to make this process more seamless and easier for them to actually do what's important, which is interact with the actual product.
For me, it's very simple. How do we find the best founders building delightful products? Web 2 has introduced the highest standard for product experiences, and if you're not there, your product is not going to be used. And we have to remind ourselves, we're super early in this room. We might use these protocols because you're nimble, you know how to find the best yield, but if we want the next few million people to use it, it has to be a delightful product. So we're aggressively looking for those opportunities, whether it's, and that has like real utility. Like you want to make a cross-border payment, we're working on that. Or you want an easy way to, well, not just send money, to interact with these tokens where you don't even care if it's USDT or USDC or BNB or this chain, you just see digital USD. We're speaking to teams that are doing that as well. So it's all about how do you continuously and aggressively abstract the complexity so you're at least at parity with Web 2 in traditional finance, and then we can make that next leap, but still a way to go.
Yeah, I have to mention that dYdX is #1 in user experience for DeFi platform. Everybody kind of have this acknowledgement inside this industry. But I have to also add that maybe it doesn't matter if you're in a safe place with very nice institutions that just let you do whatever you want, but in places you don't have it, it start to matter. Start to really matter. Have access to Web3 fully decentralized applications. So yeah, I think DeFi Web3 can have a very nice user interface and user experience, and dYdX already showing that. $4.5 billion in trading volume per day. That's a lot of money, tons of money, heckloads of money. So yeah, the dYdX are showing right now to the world that it's possible to have a very nice and friendly interface and user experience and be 100% decentralized.
Let's just take one last question back there. If you can direct it to someone, like, se quiser fazer em português também.
Oh, no problem.
Okay, cool. So yeah, if you can direct it to someone. So.
The talk was about full decentralization or Web 2 1.5. What do you guys think about the change in the Ethereum protocol from proof of work to proof of stake? And can it be a bad thing for decentralization? And you guys talked about subprime in 2008. Governments are gonna have a stake in the protocol. So what do you guys think about that?
I think it depends. For the asset that holds every single thing happening in the world of crypto, which is Bitcoin, I wish that it will be forever proof of work. But for other things, other applications, there's no necessity to be proof of work. So it really depends on if the asset, the protocol, I just see Bitcoin using proof of work forever and other protocols being able to use a proof of stake with no problem. I would be very short in this kind of matter. I don't see too much depth on that.
I just said there is product market fit for it, right? Like Ethereum restaking has accumulated tens of billions of dollars this year alone. That's like the greatest growth in capital being locked in the industry in a long time. So whether we like it or not, it seems to be well adopted and accepted by the community.
Yeah, just to finish, I think exactly I agree with you Bitcoin, it's its own use case, right? So when you think of really compare it to a traditional asset like gold, where you want to have it like in a safe, 100 decentralized way, that's kind of where you really see proof of work. But then everything else, I think proof of stake makes sense.
Well, thank you guys for the discussion. We went a bit over. Now we're gonna have an online session with Manu from Polygon. So stay around and we'll be live very soon.
Thank you.